Two things happened this week. New York just froze every new AI data center in the state for a full year. And the president, who's been telling states to back off AI regulation, just lost his last appeal at the Supreme Court. Those two facts are connected, and by the end of this video, you'll see exactly how. Here's the short version. Political capital protects capital markets. And right now, the politician who's been running interference for the AI trade is running out of capital fast. That's not a guess, that's a pattern building in real time. Stay with me, I'm going to show you the receipts. My name is Moon. I study where institutional money actually moves in US semiconductors and AI infrastructure. Not the headlines, the money. If you've ever bought a chip stock on a rally and then panicked the next time a random news story hit, this channel is for you. Subscribe. And if this helps you see the market differently, hit like. It tells me to keep digging on stuff like this. Most people think political support for AI is a permanent tailwind. Trump backs the chip industry, so chip stocks are safe from regulation. That's the assumption baked into a lot of portfolios right now. Here's the problem. Political backing and political power are two completely different things. You can have a president who wants to protect an industry and simply not have the leverage left to do it. And that gap between intention and leverage is exactly what's opening up right now. On July 14th, New York Governor Kathy Hochul signed an executive order freezing permits for any new data center pulling 50 megawatts or more for 1 full year. New York is the first state in the country to do this. It didn't come out of nowhere. Back on June 4th, the state legislature had already passed a similar bill by a landslide, 44-16 in the Senate, 102-39 in the Assembly. Why now? New York electricity prices are up almost 68% since 2019, and data centers are a big reason. This is the first crack in a dam that AI capital has been flowing through freely for 2 years. Here's what makes this bigger than one state. More than 300 data center bills have been filed across over 30 states this year. At least 12 states have seriously considered a moratorium like New York's. An estimated $64 billion in AI infrastructure projects have already been delayed or blocked by local opposition. And President Trump has publicly and repeatedly warned states not to regulate AI at all. New York looked at that warning and did it anyway. That's the first state to directly defy the federal posture on AI. Not the last, the first. Now here's the part most people missed completely. On June 29th, the Supreme Court rejected Trump's final appeal in the E. Jean Carroll case. Not a win, a loss. The jury verdict stands, and on July 8th, a judge ordered nearly $5.8 million to be paid out immediately. That's a confirmed legal defeat, stacking on top of a president who is also watching a state openly defy his AI policy in the same month. Here's my read, and I want to be clear. This is my interpretation, not a reported fact. Political capital works like a bank account. Every legal defeat, every ignored warning spends down the balance. And when that balance runs low, the industries relying on that political shield start looking a lot more exposed. This isn't confirmed. It's a pattern I'm watching closely. Now you might be thinking, okay, so semiconductors are done? Not even close. AI executives across the industry are still calling demand almost unlimited. The semiconductor index is still up over 75% this year, and this moratorium only blocks brand new large facilities. And every data center already built keeps running exactly like before. This isn't the end of the AI trade, it's the end of the free pass. So, what do you actually do with this? First, stop treating pure memory and compute plays as a one-way bet. Recent volatility in names tied directly to new build data centers shows the market is already pricing in some of this risk. Second, look at power infrastructure and analog chips. Companies powering and cooling existing data centers benefit even when new construction freezes. Names like AnalogDevices, OnSemi, and Texas Instruments have already been flagged by analysts for exactly this reason. Third, watch state legislatures like you'd watch an earnings calendar. Every new bill is a leading indicator, not political noise. Fourth, don't panic sell on this news alone. This is a rotation signal, not a collapse signal. Here's the thing. Everyone chasing this rally is watching earnings calls. The people who move first are watching state legislatures, court dockets, and executive orders. The stuff that looks boring until it isn't. That's the whole game. See the crack before everyone else sees the wall come down. If this changed how you're watching this trade, subscribe. I'm tracking this story as it develops. And if it helped, tap that like button. It genuinely helps this channel grow. Protect and grow what you've built.